All right, everybody. A little unusual to do a video on a Tuesday, but I thought it was quite appropriate given the surprising movement that happened today. And I haven't really thought about this in advance, but I just want to lay out present feelings on this. And I usually use my own products to talk about the market, but I'm going to cheat today and largely use this other product that has a lot more futures data than I've got access to on an intraday basis. So anyway, this shouldn't take long, but just want to talk this through. This is the ES, and importantly, it's the ES that goes back kind of toward the bottom that we had reached back here a couple of Fridays ago. And it bottomed out, I guess, at around 36.39. And since then, and it's only been about, 7 trading days, I think, 6.5 really, we have moved up 300 plus points on the ES, which is thousands of points on the Dow. And as you can see, it's been very constructive for the bulls. You've got a series of higher lows and higher highs all the way through. And as of this morning, and let's talk about that. As I've made clear, my own disposition was to keep it light, stay heavy in cash. I peaked at about 54% cash of all things, and just kind of wait until probably July 1, which is this Friday, because we would have end of quarter craziness out of the way, and this nonsensical optimism would hopefully have dissipated by then. Because let's face it, if Kathy Woods can actually, if her fund can go up, then something's terribly wrong. And it has been going up in recent days. So anyway, as I entered the day, I had a tremendous amount of cash and a mere 25 positions. And the market opened, which is this bar here, and it went exploding higher. And we got up to exactly 3950.00. And then you kind of know what happened next. This happened. So when this took place, and it's been such a crazy day, I haven't really reviewed this, but this peaked in 9 minutes. So 9 minutes into the trading day, although it was unclear at the time, that was it. And it was all downhill from there. And it did about 130 point reversal, which is really big. It paused and noodled around a little bit at this breakout level. And let's see what that even constitutes. Okay, yeah, down here. This had been one of the gaps. Yeah, that's what that level is all about. So this was the 3906 gap, and this was the higher gap, which it never reached. And so it paused briefly at that gap, and then continued plunging, bottoming pretty near the day's close, very near the day's close. And as I'm recording this, the markets haven't quite opened. It's about 8 minutes away from opening for the afternoon. We probably won't get to that, but it doesn't really matter for the purposes of this video. So I was surprised. Now, as we started breaking down, I started adding some shorts. And by the end of the day, I was down to about 15 or 16% cash and 35 positions. And yes, it's selling into the hole to some degree, but these weren't picked willy-nilly. I try to be sensible in the ones I choose. And as I would keep saying, there's nothing earlier than October 21st. So there's like gobs and gobs and gobs of time on this stuff. But the consensus, as I've been saying, amongst the bears, I'm not talking about the Marko Kolanovic nutcases, I'm talking about bears. The consensus was a bounce to 4,300 or 4,400, somewhere around here, somewhere in this vicinity. And it would be months off, and then at long last, we would resume going down. That was among the bears. The bulls, of course, are talking about like 6,000, they're wild-eyed, but the bears, the Attilas of the world, we're talking about 4,400. I was not, as you know. In fact, The second most bearish person I could find to myself, who I think is terrific and does great work, he was calling for about, I think, 40.60, something like that, which isn't a terrible guess. It was somewhere around here, this vicinity. I think he said 40.60 or so. That may still happen. Who knows? But for the moment, it failed real quick. And as we look here, for anyone, and this is a weekly chart, for anyone to look at a graph like this and say, well, it's the start of a new bull market, I think they're certifiably insane. This is a classic major bear market that's going to be in the history books, and everything about this chart screams lower prices ahead. So, I mean, as far as today goes, I mean, I really don't think anyone anticipated 9 minutes of bullish victory and then they get their limbs ripped off, but that's precisely what happened. I'm still not fervent about going crazy short until Friday. Bear Force One's most of the reason for that, I confess. But the other reason, as I said earlier, is the calendar shenanigans going on. Because I think, for the month of July, we're going to see earnings train wrecks left, right, and sideways. And we're going to see just more bad news all over the place. And we're going to get the real thrust of this thing happening. And perhaps terminating around when Bozo does his FOMC meeting at the end of July. Maybe he'll lose the minuscule amount of courage that he has in his body and give up, 2 months into QT. But that's a long way off. We've got plenty of time to examine things until then. Just looking quickly at the other big equity futures, this is the RTY. That is the small caps, which actually peaked way back on November 8. It has quite obviously been a bear market since then. This was the latest base, and that has failed already. And of course, what we want to do across the board is take out the lows that we had seen in this month of June. And the other one is the NQ, of course. This one also peaked way back when. That was around Thanksgiving. And this has been a slaughterfest like so. And as you can see, the sheer size of these bases, we've got this one here, and we've got this one here, and then this one here. They get tinier and tinier and tinier. They come and go much more quickly than they used to. And on the NQ, the most recent circumstance was that we had 2 gaps. We had a base below it. We broke out here with quite a lot of gusto, as you can see. Blew right past that gap. That gap was very important. And look at what happened. We almost perfectly closed the second gap, and then it all went to hell, like so. And now, we've pretty much sealed them both. We're below the first gap again, and we're even below this Fibonacci retracement. So as far as the last couple of days a month goes, they're going to pull every trick in the book. I wouldn't be surprised to see us with a 400-point range here on the NQ between these levels. I don't anticipate just crumbling through here. It'd be nice, but I don't think that's going to happen till July. But just to close up here, the thing is that we need to keep our eyes on the big picture here. And I'll just zip through quickly the 5 ETFs on which I've got puts in my personal account, and just to kind of tell the story. The lines will do the talking. Here's IYR. There's resistance on that one. This is IYT, that is the Dow Transports. And there's the gap, aka the resistance on that one. This is XLU, and I did a special post to premium members about this today. And we just about closed the gap on that and flipped lower. Here's XLV, which I confess, it went way higher than I wanted. I started buying puts on this, I think here, and I added here, and I added here. This has been a bit of a disappointment because it really pushed deeper than I had been thinking it would, but so be it. I'm in that one still. And these are all Septembers. In this personal account, I'm a little more aggressive. And then lastly, XOP. which energy, it did great things in June, and I'm thinking it's going to just set things up again, having broken this wedge and pushed back up to that price level. All right, well, I'm at 10 minutes now. I will wrap it here and see you later.